Hello and good afternoon from Proactive New York. With me today is David Lesser, CEO at Power REIT. David, good to see you. How are you today?
Great. Good to see you as well.
David, today we were talking about your financials. Congrats on another quarter of growth here. Your core FFO grew 77% year over year. Can you talk to us about what accounted for this type of growth?
Absolutely. So as we've previously discussed, Power REIT is acquiring assets at very attractive yields relative to traditional real estate asset classes. And these yields are driving this dramatic growth from acquisitions as the acquisitions flow through our earnings, which kind of is staggered based on the timing of those acquisitions when they occur. So year to date, we've acquired 9 properties, and the unleveraged FFO yield on those assets has been greater than 19%. So that kind of high yield, coupled with the relatively small size of our company, is really what's driving this dramatic earnings growth that we've been putting up on the scoreboard.
We talked about this last time you and I had a conversation, but your share price has drastically improved as of late, with total year-to-date shareholder returns being 166%. How should investors think about the current prospects for investing in Power REIT?
So interestingly, as I just said, the earnings growth that we see kicks in as we complete these acquisitions. So our current quarter earnings that we just announced do not fully reflect all of the in-place income that we have based on the acquisitions that we've completed to date. So there's even additional built-in growth from our existing asset base. And so when I look at where we trade, I think we trade at a relatively low multiple, especially given our growth prospects, just based on our built-in growth from our existing asset base. So now, needless to say, I don't expect to stop acquisition activity, but even with just our in-place acquisitions, we still have meaningful growth that we expect to hit our earnings over the next 2 quarters.
One such of those acquisitions is the Michigan asset that you closed back in September. Just remind us a bit about that one. What can you tell us about it?
So this is a sort of a groundbreaking project for us. It really takes us to the next level as a company. It's a truly state-of-the-art greenhouse cultivation facility. It's 550,000 square feet. So it's actually the largest cannabis cultivation facility in the state of Michigan, and frankly, one of the largest in the country. So we believe we acquired this asset at a very, very attractive basis, and this should allow our tenant to be quite competitive as a low-cost producer of high-quality cannabis in this Michigan market. The Michigan market has been growing tremendously.
I do want to pick up on something. Your most recent quarterly result was a core FFO of 62 cents per share. In your most recent investor deck, this references a forward core FFO per share of 92 cents per quarter. So can you explain this guidance for continued growth?
Right, so that goes back to what I was describing. As the impact of the earnings from our acquisitions kicks in, really just that in-place portfolio will head us towards that number that we're providing in terms of guidance. And so really the largest acquisition, this Michigan asset, really will kick in over the next 2 quarters in terms of earnings impact. Now, from our standpoint as a company, we really try to focus on transparency. So our investor deck provides, frankly, a very detailed buildup that shows how we calculate that number so investors can follow along. And I think we really stand out in terms of our transparency and our approach to providing investor information within our investor presentations.
You talk about the built-in growth, but what other prospects can drive future growth?
Right. So look, we trade right now, if you just kind of look at that 92 cent per share number that we're providing as guidance based on our existing portfolio, that annualizes to about $3.68. And at our current stock price of about $67, we traded about an 18 times multiple. This is really a relatively low multiple relative to what we believe is our peer average. That's more in the 30 plus. And again, we're trending with very big growth that we think can continue. So we look at this and say, wow, we've got a lot of great prospects for investors to participate alongside of us in the near term.
So how might you fund some of those prospects or those acquisitions?
Certainly. So one of the things we describe in our investor deck is that we are focused on non-dilutive capital to fund the next phase of growth through acquisitions. So we're currently working on some debt options, and we also have the ability to issue preferred stock. We do have preferred stock outstanding, and our preferred stock trades at around a 7% yield. But frankly, what we believe are the good comps to our trade, our preferred stock trade inside of that at even lower yield. So the cost of capital on either of these two funding options should provide a meaningful positive investment spread that should drive meaningful accretion and growth in our earnings. So that's really what's in front of us and how we're going to fund some additional growth. Our investor deck provides, for example, a hypothetical. So if we were to raise $50 million, call it from a combination of these two sources, we can actually see our FFO based on the assumptions in that slide heading towards the $5 range. And again, this argues for some multiple expansion as we continue to drive, which should drive attractive investor returns.
For investors who might be new to the story here, just remind us about your existing portfolio.
So right now our portfolio has 21 greenhouse properties, and this comprised of approximately 1.1 million square feet. So we've really started this new focus on greenhouses a little over 2 years ago, and in that time we've really built what I think is an exciting portfolio, and really we've become a REIT that is a bit of a technology play. That technology that we focus on is that greenhouses are a better way to cultivate certain crops. And in the cannabis industry, most of the crops are either grown outdoors or indoors in a sort of converted warehouse. We view the greenhouse, as really the sustainable approach to cultivation. And so I feel like we're a specialized REIT and really a technology play as well. In addition, we do have some legacy assets in the form of solar farm ground leases as well as a railroad. So overall, we feel like we have an interesting portfolio and really a portfolio that's focused on sustainability.
You mentioned sustainability. ESG remains top of mind for many investors here. So how does Power REIT fit within that narrative?
So we certainly talk about our company as having a focus on people, planet, and profits, and really the triple bottom line. So look, I believe ESG is clearly a balance. Without profits, activities are not sustainable. So we truly believe that we have a very strong ESG component to our activities, and we look forward to engaging with ESG-focused investors as we continue to implement our business plan.
David, thanks so much for the time. Appreciate it.
Thank you.